Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I am Yatin Mota.
Well, Yatin, clearly the policy impact quite visible on the markets, right? It was an extremely choppy session for the market. At one point in the day, we started on the back foot, but at one point in the day, we managed to stage a good recovery.
Yes.
But once again, we fell, and then of course 24,200. That's a crucial support zone. That has been broken on the downside. Even 24,150, we are below that level. But just to give you a brief about what the RBI governor has delivered in terms of interest rate decision, it was a hawkish pause that was delivered by the governor, and what the street was anticipating was some kind of softness in terms of the stance,
yes,
which has not come by. In fact, his commentary was fairly hawkish because he reiterated the fight against inflation and said that till inflation is under control, high growth will not be sustained,
yes,
and which is why the focus of the speech was mostly on inflation management. He also warned in terms of deposit growth as well, right? He said that banks need to be a little more innovative when it comes to fund mobilization. Also, the growing deposit and credit divergence is something that could lead to difficulties for banks to manage liquidity.
Absolutely.
So these are some of the important messages coming out of the speech from the RBI governor. But interestingly, the bank index managed to hold out in the green, Yatin. Mildly so. So Bank Nifty just about ended in the green. But aside of that, if you look at the texture of the market, the broad end of the markets was rather outperforming the benchmarks. Cuts on the mid and small cap indices were lesser compared to the benchmark indices. The breadth was of course in favor of losers, almost 2:3. VIX rose over 2%. IT, metals, realty and oil and gas, these were the big drags today. But what really held out was the pharma pack and mild gains coming in on the private bank index. Two changes to Nifty and Nifty Bank index that's going to happen, I think, in September. Rejig. Canara Bank is set to replace Bandhan Bank on the Nifty Bank index, and Trent and BEL are expected to join Nifty in the September rejig. In terms of individual movers, today we had HDFC Life and SBI Life doing well. Tata Motors after curve launch, Yatin, among the top gainers. HDFC Bank and Cipla, those were the other movers. On the flip side, you had IT names like LTI, Mindtree and Infosys, those were the losers. Aside of that, you had Grasim, Asian Paints and Power Grid. Those were some of the other losers. But Yatin, broader end of the markets, a lot of result reactions still can be seen, right? Take us through some of them.
So, it was a choppy session, of the market. The advance decline ratio drastically changed in the second half to be almost at 2 advances for 3 declines, which was almost 1:1. So, yes, some bit of selling in the midcap index, which were down 0.5% each after a 0.5% green kind of opening. If you look at the gainers today, Godrej Consumer, the stock was up 9%. BSE also reacting to the numbers was up 8%. Root Mobiles, Triveni Turbine, K Fintech, all of these stocks moved smartly in trade on good volumes. What did not do well is Lemon Tree. Reacting to the earnings, the stock was down 10%. Chemplast, AstraZeneca, after a weak set of numbers, both of these stocks fell. In fact, AstraZeneca reported a very muted quarter, post with the stock, clearly fell in trade. But if you look at stocks like Suzlon, they are clearly on an up move. Stock was up 5% on upper circuit. The price was almost 73. Piramal Pharma, after the earnings today, has hit a fresh 52-week high. Stock, up nearly 4%. Alkyl Laboratories as well as Lupin, Natco Pharma. All of these pharma stocks, are making new multi-year highs, and clearly the focus of the market is probably to move on the defensive side, focusing on more select pharma names. Lupin, obviously the management commentary yesterday was good, and today also we saw some bit of target revision. I will be talking about Lupin in just a bit, but Nandita, great day for select pharma companies.
That's correct, Yatin, and I think yesterday also we discussed Lupin.
Yeah.
So, good traction in pharma names in the last 1 month, ever since the markets have become volatile, right? A lot of sector rotation happening, and a lot of pharma stocks finding favor within the investor community. But let's focus in on all the stocks that are on our radar this afternoon, starting with BSE, Yatin. Stock has been under pressure, right, off late. But today, it was a good day for this stock. Numbers have been pretty good, and of course, that's reflecting in the stock prices as well. The first quarter profit stood at 265 crore rupees vis-a-vis 107 crore rupees on a quarter-on-quarter basis. 3 times of what it was in the last quarter. EBITDA as well more than doubled to 284 crore rupees vis-a-vis 96 crore rupees. It reported a revenue growth of 24% on a quarter-on-quarter basis. There's been a 45% quarter-on-quarter increase in transaction charges, and that aided the top-line growth. Even the treasury income grew somewhere around 7% or thereabouts. Other security services were up somewhere around 16%. EBITDA margin 47% vis-a-vis 19.7% on a quarter-on-quarter basis again. The margin was driven by a 53% drop in SEBI regulatory fees, and the fall in administration and other expenses also aided margins. Now, the exchange was asked by by the regulator to pay regulatory fees to SEBI based on annual turnover calculated from the notional value and not the premium value. So that is something that BSE had calculated that it would had to set aside somewhere around 170 crore rupees or thereabouts, and that it had done in the last financial year itself. According to its, as I mentioned, according to its calculations, 165 crores something that the company was envisaging in terms of payment on total turn value and notional value rather. So it had already made that provision. So that kind of aided the numbers for BSE. Aside of that, if you look at what Motilal Oswal has to say, is that the relaunch of derivative products has turned out to be the trend setter for BSE. Higher member participation product launches is something that will drive market share gains for the exchange. And it continues to gain market share in derivative segment, of course, as its products are widely accepted. And it has, of course, gained quite a lot of ground, right? Because larger player NSE has already been there for a long time.
Correct.
But BSE, being a new entrant, it has kind of posed stiff competition to NSE as well. But Motilal Oswal has retained its neutral rating on the stock. Because there is some bit of uncertainty on the back of the eventual FNO regulations that are likely to be announced. I mean, there's been a draft norm, but we'll have to see whether or when it gets implemented and what kind of changes happens. But in terms of the regulations, SEBI is considering a proposal to limit weekly expiry to one option per exchange. NSE has two, Nifty and Nifty Bank, and BSE has Sensex. So if NSE has to choose one, that gives runway for BSE to increase its market share. So that's how it will be a beneficiary. It stands to benefit from those rules. But of course, today we saw an 8% up move on the stock. The stock had a phenomenal run, but it has corrected 30% from its peak already. But in the year so far, in 2024 so far as well, we've just about seen a 9% gain for BSE. But the stock itself, Yatin, over the last few years, couple of years, I mean, I don't know, it has seen a very, spectacular run.
Correct. And, BSE clearly, today also they've launched, gold and silver in terms of products on the commodity exchange. So, options, futures, as well as now commodities, something that could probably push, BSE's valuations as well as earnings moving ahead. But let's talk about Pidilite. Jefferies, has come out with a note with a hold call on Pidilite. They've raised the target, however, to a level of 3,310. Pidilite results came in yesterday, post the market hours or around that dying moment of trade. Today, the stock gap opened, with a 3% gain. Now, in an environment where there is pricing issue, there is, cost control issue, Pidilite has reported good improvement in their gross margins as well as EBITDA margin. Moving ahead, given the fact that company has taken some price hikes, the benefits would probably flow in the P&L account. Obviously, in the paint segment, we have seen some competition coming in from Birla as well as JSW Paint. So, the stocks of Asian Paints and other paint companies like Indoco Paints are nervous. But probably Pidilite has a limited competition in the products that they operate. Now, if you look at Jefferies, they say that the rural growth has outpaced the urban growth rate according to the management. And probably if the normal monsoon were to set in, from here on rural should probably grow in a much better position moving ahead. In the B2C segment, we have seen the export market rise as well as the overall contribution from B2B business as well as the export business rise. So that is also one lever which will help apart from the B2C business, which is the likes of adhesives, the likes of Araldite, the likes of Fevicol, so on and so forth. Now, Jefferies has raised the EPS targets by nearly 4%, and they're expecting a EPS CAGR of 18%. So, this is one company probably which will keep on growing at a pace of 18-20%, and is available at a decent valuation to the peer set or probably to the likes of Asian Paints, the nearest comparable, if I may put it so. So, this is one stock probably has some legs to growth moving ahead, especially from the rural market according to brokerages.
Of course, uptick in the rural demand and rural end of the market, boding well for companies like Pidilite. But the other stock, consumption stock, once again, that's in focus is Godrej Consumer. The stock saw a 3% downtick in trade on the back of a mixed set of numbers in the first quarter. The revenue was down somewhere around 3.5%. Profits, although were up 42% or thereabouts, but still they were slightly below estimates. But margins were the only beat at 22%. Rest of the numbers, or on the rest of the parameters, the numbers were a miss. If you look at the recently acquired Park Avenue and Kama Sutra brand from Raymond's, that contributed somewhere around 150. The reported revenue from these brands was somewhere around 153 crore rupees or thereabouts. The company, of course, the main point is that the company has announced a foray into the pet care segment, which is a growing segment, and it will be investing somewhere around 500 crore rupees in this business over the next 5 years. So that's something that brokerages have taken note of. But domestic business for the company has shown resilience and reported high single-digit organic volume growth and mid-single-digit value growth. The company itself is aiming for 2 to 3% price growth coupled with high single-digit volume growth in FY25. Brokerages are optimistic on the stock despite mixed set of numbers. They have taken note of the company's foray into the pet care segment. Jefferies has a buy rating target price of 1,580 rupees per share. They've noted that the company has missed its estimates on margins in India business. And, but the India organic volume growth of 8%, is something that stands out across the peer set. And, focus on new launches, which of course also includes the foray into pet care segment, is something that they've taken note of. They're positive on the company on the back of this foray. And they also like the excessive focus that the company has on growth. On the other hand, you have Morgan Stanley. It has an equal weight rating, target price of somewhere around 1,325 rupees per share. It has noted that revenue was a miss, but EBITDA margin, of course, was ahead of estimate. India business volumes were strong, but the other, overseas business like Godrej Africa, USA and Middle East, the performance there has been fairly weak for Godrej. But I think it's the pet care segment entry that has got the street excited. Although the stock prices were down today, 3% lower. But if you look at the performance on a YTD basis, it has gained somewhere around 30%. Decent, given the fact that we've seen FMCG stocks pick up only recently, right? So in that sense, I think 30% is. And
I think that the stock price reaction was much to do with the Raymond acquisition that they have done. I think the street is hopeful that that would be one of the growth drivers moving ahead. Obviously, Godrej Consumer has a lot of businesses, including the export market, African market, Indonesian market. They do business throughout the globe,
right?
And probably that adds to some complexity in earnings as well.
Well, those were all the stocks that were on our radar this afternoon. But Yatin, today was extremely volatile. You can see crests and troughs on the Nifty line chart. But of course, hopefully tomorrow will be a better day. And now that the RBI policy is out of the way, there could be some stability.
Yeah.
And earnings as well ends next week, right? So
Correct.
All the triggers, major triggers are out of the way. But of course, the Fed chairperson's Jackson Hole speech later in the month will be the next big trigger for the market. But with that, we are completely timed out on this edition of Closing Bell. Thanks a lot for tuning in. You guys stay tuned to Moneycontrol for all your other news and updates. And of course, come back and join us tomorrow morning at 9 a.m. on Opening Bell. Have a great evening.